Stephen, welcome to the Buy, Grow, Sell podcast.
Thanks, Simon. Pleasure to be here.
Mate, it's my pleasure. I've been very much looking forward to this chat. Obviously, we got introduced by a mutual contact, Bernadette, who is a wonderful person. So, mate, for our listeners, maybe could I kick over to you? Maybe you could give us a little of your background, give people a little bit of a sense of who you are and kind of, what led to us having this chat.
Yeah, for sure. So I'm the CEO of Hunt Hospitality International, which is based on hospitality management. So we basically acquire hotels, and that's the management of the hotels is what we're all about. We cover a radius of about 500 kilometres. So we go from Newcastle and we finish in Coffs Harbour. And
Okay.
I started a fund up after many years of being in the industry, and I sort of wanted to branch out. And I was in partnership with my family at one particular venue. And then I just thought there was more that I could do than just run the one pub. And prior to that, I'd had a bit of experience with a group called the Independent Pub Group. And so they had 20 pubs across Australia. And that experience was fantastic. So when I set up my fund, I literally went to a meeting in Sydney, an investor meeting, and looked at their information memorandum and looked at the structure. And then I spoke to my accountant and my lawyer and said, I think we can do something similar. However, we want to have our own twist on it. We want super funds to be able to invest. And so we sort of reinvented the wheel slightly and then kicked off the fund in 2015. And I had 400 grand. I actually had a property in Sydney, and I did really well out of a sale of that. And so I had 400 grand. And then I started the fund with the 400 grand, and then now it's worth over 50 million bucks. So the trajectory's been hard and fast. So
yeah, and hair raising at times, I'm sure.
Yeah. The fundraising part's probably the hardest bit, and running the pubs is the easiest bit, even though it has its challenges. But having done it for a long time now, you've had the highs and lows, so you kind of have a better gauge on how to come back, like from COVID and things like that. So
yeah, interesting. So a couple of things spring to mind already just from that is that, one, you mentioned about being in business with family, and I'd like to unpack that in a second because I think that's really relevant and interesting to people who will be listening. But I'm just kind of curious, like your entry into the pub world, did it start after you were working for other people and you got a sense of it, or was there some other sort of sense around this was a space you just enjoyed or liked or were interested in?
Yeah, so I actually really liked it before I first started working in the pub. And it's kind of retrospective that you actually look back. And my parents had a barbecue area at home, and they put it in when I was 15. And then 16, 17, 18, we started having barbecues and parties at our house. And so I was already in the middle of the community then. Like, we had guys from the footy club. We had the jocks. I was a bit of a jock back then. We had the tech heads, some of the guys who were getting into computer science. We had the girls from the netball team and local community. And that was really the true start of hospitality for me. And then I got a job in the local pub. I was really fortunate that the people I worked at, so I started, washing plates and then worked my way up to pouring beers. And back in the day, you had a white shirt and a bow tie. And so, that was kind of fun. And all my mates would come into that pub because it wasn't far from home. And the experience I had with those guys was invaluable. I still use a lot of their systems now, but I was 18, so at 18, you're like, I'll just turn up and make some beer money. I wasn't that, I didn't know about it too much, but they were exceptional operators. They're probably up there at the time with the best operators in the country. Yeah. And they were very innovative. Like, they had brought, they'd go to the States and pick up ideas and bring them back and implement them into the pub. So, and then it just kept rolling along, So I went over to London and did that rite of passage and worked in pubs over there and had a great time, and then came back home and started studying hospitality. And then many years later, that led on to a master's degree in applied finance, which I don't recommend to anyone. It's a different level in mathematics. Like, I think I pretty much charmed my way through it. I got on really well with the lecturers, and I'd always end up with that magical 50%, So But it was hard work, but I learnt a lot there too. So the career sort of evolved, and then obviously I enjoyed managing pubs. And we bought our first pub in 1997, which was a family, and I've been working at pubs at that stage for 6 years, and that was the first one that we owned independently.
Yeah, right.
So that was
where was that pub?
That was in Chippendale, Thurles Castle Hotel.
Okay,
So
cool. So
on Cleveland Street, not far from Sydney Uni.
Yep, gotcha. Very, very different crowd, I imagine, there compared to some of the sort of more country regional pubs.
Yeah. So at the time, it had up there with the highest crime rate in the country. So we boarded Redfern, and that's like in the late 90s.
Yeah.
Unfortunately, it was quite a rough area. But the people I met there, that's probably the starting point, or second reminder about involvement with the community.
Yeah.
Because all the people who visit the pub would always sort of warn you about people and places not to go. And they were really awesome. Yeah.
I'm old enough to remember that time in the area, so it's and I've worked at a few pubs myself, so that's a story for another day. But I'm interested. You talk about buying the first pub with the family. Can you talk me through what did that look like? Because obviously they say going into business with family and friends and all that sort of stuff can have its challenges. What was it like for you guys?
Yeah, it was good, and the learning about like my family are pretty much all accountants apart from a younger sister. So I'm one of 5 children, and mum's an accountant, dad's an accountant. My oldest brother is. My sister's got a commerce with accounting. Then my next brother does as well. They're still practicing. And then there was me who kind of went, I don't really want to, be an accountant, despite the fact I have a lot of respect and a lot of arguments with accountants. And my younger sister works for Stockland. So she's created her own path as well. And so when we bought the pub, pretty much as licensee, it was everything, the buck stopped with me. My parents and myself had bought the pub, and it was amazing because you just learn through certain failures and certain wins. Like we paid 1.4 for it and sold it 2 years later for 2.1.
Wow. Yep.
There was a lot of blood, sweat, and tears in that, and quite often coming from an accounting land, they couldn't understand what I was trying to do in pub land because they'd be looking at the P&L and going, what's going on here? You're spending money on promotions. So they were learning about running a pub, and also I was learning about tax advice from them at the same time. Yeah. So it was an interesting sort of mix in the conversations. My dad used to come in and say good day probably once a week, and in terms of capex, that was always run through the family. And it's family dynamics play a long part. And sometimes the history of your family can actually be prohibitive because your parents know from when you're a kid, you know what I mean? And they kind of, those memories come up when you're making business decisions.
Yeah.
So, but also they're very forgiving when you make a mistake, So, yeah.
It's interesting because we often talk about going into business with people, and I know I've spoken to lots of people on this podcast about partnerships and family and friends and how that all starts. And I'm just sort of curious, and obviously don't want to sort of tread on anything that might be confidential or whatever, but I am sort of curious about how that discussion starts. Like is it you find a pub and you throw it on the table at the kitchen table over dinner or something, and do you talk about a shareholders agreement? How formal do you get, right? Because I understand that all these relationships, there's a lot of history, but where's the line there?
Well, the formalities probably came in our second pub. So the first one it wasn't really formal. We had looked at 20 pubs before we bought it. Wow. So we had travelled all around Australia having a look, and my father knew it was a solid investment. So we'd looked at P&Ls and gone through all that. And funnily enough, I finished my first round of study on the Friday. We took over the next pub the following week. So literally it was, you've got to implement all these practices that you've learnt. And so it wasn't too formal. We lived in the terrace house next door with my brother. And initially, he was awesome because he'd help do the tills and everything else. Like there was only 10 employees, and so the good thing about, like I said, with the family, they could see that I was working really hard for the business. Yep. So there weren't too many formalities about shareholder agreements and things like that. That came a lot later, so that came with the second acquisition. And even though we've been in that one for a number of years, we basically had to have a management agreement, and sort of in the management agreement, like my family are pretty hard negotiators, so I had to get a option in there to actually buy. So if we went to market, I had an option there to buy it. So to come up with $24.5 million was a challenge, but that's where the private equity sort of comes in. So
yeah, interesting. That's intuitive. That's a big leap, right? I bought the first one 1.4 odd, or I think you said, and then sold for 2 point something. That's a massive leap. Can you talk us through a little bit around that second acquisition and what that looked like?
So after selling the first pub, and I had a few months off, and then I got a job with the Bayfield family, who are just fantastic people. They're just really, really nice people. Even from the outset, they said, "Why are you coming on board with us? Because you've managed your own business." And I just said, "Look, I'm here to learn as much as I possibly can." And they took me on and were really good mentors. And then basically we found the Kent Hotel in Newcastle. So it's 20 years now. So I've actually been managing that pub. And so we actually, obviously in partnership with my family, we bought that in 2002. Now at the time, we paid $8.6 million for it. And that was a lot of money in the time. People in Sydney were like, doesn't that get you half of Newcastle? But it was a good pub, and it had been a good pub. And obviously we did our DD on it, and it had been a good pub for years. So we knew that we'd get in there, and it's a tangible thing that you're buying. There's no, you're not buying on hope. You're actually buying off something that was substantial. So for many years I ran that pub, and then I worked with the independent pub group and got that experience with multiple venues. And then I basically said to my family, "Look, I want to set up a fund and buy, have some independence." And they're like, "Well, you can do that, but you still got to run the Kent Hotel." And knowing that I had that option, it was probably always the goal of them and myself to end up setting up a fund that could actually buy the pub out. And that took a number of years. So so that was probably, after the initial purchase, that was 2019, so 17 years later.
Wow. I'm keen to get to that part of setting up the fund, because I think that's a completely different world and different space, different approach. But before I get to that, I'm just curious if you can help us also just explore this idea of how pubs/hotels trade. And just by way of context, I guess, I don't think a lot of listeners necessarily au fait with, business valuation as such, but people often, we talk on the show a lot about, a standard valuation might be on a business might be a multiple of EBITDA, or, and if there's a property involved, maybe the property is sold as a separate asset. And so there's lots of different ways, I guess, to value businesses and assets. And I'm just wondering, without going into the nitty gritty on individual deals, can you give us a flavour of what that looks like?
Yeah, so with pubs, you generally have a valuer who is on the bank panel, and depending on who you're borrowing with, some valuers are covered by all of the major four, and then some are only allied to one or two. When I say allied, they've always got to be independent, so it's an independent valuation. And when we bought the Kent, I believe the multiple of the EBITDA, so earnings before interest, tax, and depreciation, amortization, let's just call it EBITDA, that probably at the time was about 7 times.
Wow. Okay. And does that include the physical asset of the building and everything else?
Yeah. That's lock stock. So that's everything. And then if you have a leasehold, basically the multiple was lower, but you actually don't own the bricks and mortar.
Gotcha.
And the longer the lease, the more, the higher the premium you pay. So,
yeah, sure.
And we have a couple of leases in our portfolio, But generally speaking, the yield on those, it works out to be higher than a freehold.
Right.
So the payoff of the freehold is you own the bricks and mortar and you can on-sell it
Yes.
whenever it suits you or whenever market conditions are good for you.
Yep.
Whereas when you've got a leasehold, you can still sell the leasehold, but generally speaking, the leasehold, you're tied in with the landlord and you can have, a decrease in value. Or the other way you can do it is if you don't have a right to buy it, you can actually improve the profitability, which is good for you in terms of your return. However, that's just making the whole business worth a lot more. So you don't really get the full cream, if that makes sense.
Yeah, absolutely. No, it makes a lot of sense. I guess that's it's a big call in terms of which direction you want to go and what strategy you might play. Out of interest, when you acquire these typical things, I mean, I see with a lot of businesses, owners typically will try to put the physical assets, the buildings and all the rest of it, perhaps even in a different name to the business, sometimes super funds, whatever. But I imagine, I don't know whether you employ that strategy, but I imagine in that scenario, you can then kind of play around with rents and different things and shift things around a little bit to maybe work your own financial strategy. Am I making sense there? Or
yeah, and that's bang on. So basically, the general structure for everyone is, and obviously you got to take good advice, and because my parents are accountants, so we got the best way possible. So you have two companies with the same directors, really. You have a freehold owner as a company, and then you have the leasehold as well.
Gotcha.
So obviously the leasehold pays rent back down to the freehold. Yep. And it's pretty much a standard practice these days. And if you have a partnership, you basically would be buying into the freehold and the leasehold.
Yeah, gotcha. So I do want to get onto that private equity piece, but I guess to sort of round out my thinking around pubs, I imagine different pubs are different. So I don't know, maybe you can educate me a little bit here, but I've seen in the press a lot of discussion around pokies and, social impact and stuff like that versus your traditional food and beverage. And I imagine with some of your hotels, you've got accommodation as well. Like, are you seeing a big shift in the kind of trends here? And are there things that are really, I guess really important, I guess? How different is the outlook when you look at pubs today versus maybe even 20 years ago?
Well, I think it's after COVID, I think people getting more involved with their local community is really, really important for the business owner and operator. So so I see it being, I'd say this year might be a bit of a rocky road. If there's any more strands of COVID, it'll be tough. But because we've been through that, I think hospitality will thrive once we just get through. Most pandemics are 3 years, so we're into year 3, and I believe we'll hold tight and we'll get through it. And all the financiers and all the stakeholders, your suppliers, we're all on the same team. So. Yeah. But in terms of the structures of the businesses, we really target a good mix of trade. Yep. And so we don't necessarily go for pubs all on their gaming. If your pub turns over $100,000 a week, we sort of like a bit of a split with food, beverage and gaming of about 30% of each.
Okay.
And then if you've got a bottle shop and accommodation, then, that falls into the mix. Accommodation is really good for net as well. And you get some operators out there, that's how we sort of operate. And we sort of class it in as a full group. So some of our pubs have got really strong accommodation. So we really focus on that. And some have extremely good F&B. So we really focus on that. And then some of them are probably, we don't really have too many real gaming-centric pubs. Like we have pubs that go well with gaming, but they also have really solid bar. And one particular one has good gaming, really good bar, but not a great revenue in food.
Okay.
And so moving towards the future, I think gaming will be around for a while because we've got great systems in there to effectively help problem gamblers. So we've got a game care program through all of the hotels. So if we identify someone who's coming into the pub a bit too often, we generally stop them and say, look, here's a chance for you to basically call this counselling service. And it puts the responsibility back on the individual However, we like to step in there. Like, no one wants to see any of their family, and friends losing large amounts of money. It's not. It's not
Yeah.
what the publicans' ethos is all about. We're there to get in the middle of the community and provide a really good, fair service. So I think the future will be like pubs now. There's not too many bad ones, you see. They've all been refreshed, and I think Justin Hems did a fantastic job in Sydney, not to name drop, but he
Yep.
revolutionised pubs in terms of the way that they were fitted out. And the rest of the industry we've got to improve. And the pub industry is really improving. So all the pubs have a better food offering. They have all the craft beers. There's a revolution in that.
Yeah.
So everyone's had to raise their bar. And the important thing about that is, for our sector, is more people are coming into the pubs. So they may not be drinkers, but they're coming in for a nice meal.
Yeah.
So
Yeah.
it's changing the face of people, who come to our pubs, our customers.
Yeah, nice. I take a couple of things from that. I think it's, your point there about gambling and stuff like that is a good one. I think, traditionally the pubs have always been kind of that cornerstone institution of a community, right? It was the place where people met. It was a place where it was just that common ground of collection. And pubs invariably are the ones out there sponsoring local footy teams and doing all those kind of good things to support the community. So I can see, and I appreciate the fact that you guys are out there also looking at potential challenges and saying, how do we actually support these people, because they're members of the community too. So I think that's a huge positive. But to your point there about Justin Hems and the way things have shifted, it's interesting, isn't it? Because once upon a time, and I certainly did this as a young lad, we'd go to the pub to have a few drinks, and certainly at that age, having a couple of drinks was pretty high on the priority. But certainly these days, and pandemic maybe has exacerbated this or accelerated this, is that it's, when I go out to a pub now, it's for an experience. I can sit at home and drink craft beer and fantastic whiskies, but I'm actually going to the place because I want to enjoy the atmosphere. I want to feel the vibe. I want to enjoy nice surroundings. And I'm willing to pay for that because it's something different from than what I'm getting in kind of regular life.
Yeah, well, we offer something every night in our pubs, a reason for people to go there, and that's to counter that people are sitting at home. So we've got a lot of the traditional things. We run trivia nights, and people come in and have a meal, and they get together in groups. I think that's one of my favourite promotions. And then you have your pool nights where people are playing in a pool competition.
Yeah.
We have the good old karaoke. That still goes well for us. A lot of people don't do it anymore, so we keep doing it. So and that's really good fun. But probably one of the biggest draw cards and most successful is the entertainment. So having your bands come on and even DJs. So we've sort of moved with the times.
Yep.
So yeah, the entertainment side of it, especially on the weekends, that draws people in, and we really focus on that. And we really focus on I call it all the one percenters. So, you've got to have all your light globes fixed. You've got to have all your tellies on. You've got to have play to the right crowd. So you're not going to have Akadaka playing at 10 o'clock in the morning when, your grey power are coming in for a cup of coffee. You know what I mean? You've just got to morph as the day moves on.
Yeah.
And we love it in our late trading pubs because we get so many different sectors of the community. So, it starts off with a lot of the old retired fellas who get up at 4 a.m. and, they come to the pub at 9 and have their middies of 2 years old. And then you get your lunch crowd in, which can be a lot of people in suits. And then later in the afternoon, you get your tradies. And then you get people in for dinner again. And then you get the people who come out for entertainment. So it's a great industry in that regard. But you're right, you've got to really work hard to get people from home into the pub.
Yeah, and I imagine, as you said before, year 3 there'll be a little bit more coaxing, I think, going on. But I think we're definitely starting to see a shift in that. Well, or maybe that's just my perception of I just want to get the hell out of the house. But it's and we're looking for new places to visit. So no, that's cool. Maybe I can change gear here a little bit. I've been keen to talk to you about this whole, journey for you going down the private equity path. something we talk a lot about on this show and just in general with our business exit advisory is this idea of growth via acquisition. And I think since the beginning of the pandemic, this as a topic has really taken off. A lot of people out there who haven't traditionally bought businesses are weighing this up and saying, well, how do we maybe instead of going out and bashing up the competitors and trying to, putting price pressures on and stuff like that, maybe we should acquire somebody to grow. And that's probably in a little more of a sort of traditional sense of the word. You guys obviously can't just start a pub and do a pop-up on the local corner. So acquisitions is going to be essential. But I think this theme of growth via acquisition is still relevant. So can you talk us through that journey a little bit and what it looked like?
Yeah, so the first pub we bought into the fund, I had to go out there and I had to set up an IM, information memorandum. I had to get all that right. I had to clear that with the lawyers who specialise in corporation law. And I had to have an accountant who was au fait with setting up a fund. We had to pick the right style of fund. And then so I had my 400 grand and I set up the IM, and then I went out and, spoke to potential investors. And probably at the time, the first acquisition we were looking at was 4.2 mil, and it was actually my local pub. So I had to raise a bit over 2 million, and then the rest we borrowed.
Yep.
And I went around and did, had a lot of people who said, yeah, we're in for sure. So I was like, oh, this is easy, When the checks weren't coming in, I actually came down to the last day, which is a bit of a harrowing experience, where I had to raise $1 million in one day, and technically in 8 hours. Otherwise, I was going to be sued for the pub to settle.
Wow!
And luckily, fortunately enough, I nailed all three investors in the one day. So that was exciting, but really draining, and I wouldn't put myself in that position ever again. You know what I mean? So
yeah.
And then so that was year one. So we've got one pub worth $4 million, and then the acquisition phase. So the investors were getting a cash return.
Yep.
We had it revalued at 5 within the first 6 months. So they said, Steve, can you go out there and buy more pubs? So we set up a new IM. I found an operator who was getting a little bit tired. And he'd been in the pub for too long, so he's getting a bit shop blind. He missed a few things.
Yep.
And that one was a really, really solid asset right in a really good area of Newcastle. And the other one was in Raymond Terrace, and there was room to move with that one because that particular pub had 3 investors, and they kind of lost a good operator to manage the day-to-day. It was a friend of mine who's now one of our investors. He rolled his money in, which was really good. So I think the fundraise for that one was probably about $12.5 million. So,
yep.
And we got that one reasonably quickly. So it was harder to get the first one.
Yeah.
The second one, so a fund went from $4 million to 21 million within a year.
Yep.
And then to get further growth, because the assets had all grown in value, market conditions changed. And also probably the more technical points were you've got to have a really good constitution that is favourable for everyone.
Yes.
Our first constitution was flawed, so it basically meant 100% of our investors had to agree to certain spending over certain amounts. And thank goodness at the time I went back to the investors and said, look, this is something, that's actually something we missed. And they've all voted in favour to change from 100% vote down to, I think it was 55.
Yeah. Okay.
And so that was fraught with danger. Sorry.
Yeah. No. It's really interesting because I think, if I take it back a step, even though you went through some challenges with that first fund, people could be mistaken in thinking actually this is still a reasonably easy process, right? And I think there's always going to be a lot more complexity than we can even unpack on a show like this. But raising a fund. And I'll defer to your kind of expertise and experience on this one, but you obviously can't just lob up to anybody and say, do you want to chuck a few bucks in our fund and invest, right? Like there's retail investors and wholesale investors, and there's different things around that. I presume your fund was wholesale investors, and therefore you have less regulation and complication. Is that just broadly speaking a fair comment?
Yeah, it is. Yeah. So wholesale investors, the threshold, I believe, is they have to have assets, net assets of over $2.1 million. I think it is. Might be 2.1 or
2.5 or something, I think it is. Yeah.
Yeah. And then your retail investors are your mum and dad investors. But back to the wholesale, you could be on, I believe the other test is if you're on over 250 grand a year and have been for a certain number of time. So I believe ASIC and the government see those investors as being more educated than the mum and dad. And it's really good because they offer that protection. Yeah. So that stops, the mum and dad investors for basically investing and losing, their super funds or their, God forbid, their house.
Yes, no, exactly right. And I think too that whole retail side, as you say, you need a proper prospectus. It needs to go through ASIC. It needs to be approved. It's an entirely different process of getting that approved into market than dealing on the wholesale front. And I think too, and I imagine too, wholesale investors generally investing through corporate entities, which means that it's usually a commercial deal as opposed to dealing with a private resident as such. So I think I just wanted to give some insight into that part of it, because it's not the sort of thing you just wake up one day and go, oh, I might just throw together a fund and see if I can raise $5 million.
Yeah, well, a lot of the work really you do before. So before you actually start, you've got to really educate yourself on it. And the Constitution, getting that right, which we didn't to start with, but luckily we changed that. Getting the Constitution, really, it's the rules of the game.
Yeah.
And you can have that. You can have a shareholders agreement on top of that. So there's quite a few complexities to do with setting it up, but it's all before.
Yeah.
And you have to research that, and whether you actually eventually want to list is another layer of complexities. So
yeah. It sounds a little bit like I had a friend of mine who's in the building game, and he was telling me that he said 30% of my work's done before we turn any soil, and it sort of sounds like a kind of similar process there. That a lot of that build up is so critical. Can I ask, Stephen? Like, you've started the fund, and then of course it's starting to grow and evolve. You're bringing in different investors. It just starts to change this animal that it is. It becomes its own kind of entity. I'm curious to know if there is much of a discussion around exit strategies for people. Do people come in with the intent of just wanting to make some money over a couple of years and then get out, or is it a long haul, or how do you approach that?
Well, we've pretty much in the time, so in the 7 years, so first year there was less investors, and then year 2 we brought in more, and then in year 4, I believe, we brought in more investors as well. And a lot of them have stayed. So I think probably in that time, I can name it in one hand, I think it's been 5 investors who've exited. So we've been really lucky. And if someone wants to invest, we just say, can you give us a bit of notice? And then go back to our existing investors.
Yes.
And a lot of our investors with their distributions just roll it over into the fund. So they don't take it because they've seen such strong capital growth.
Yep.
So they're getting a return, and then they're basically the units, because we're a trust, they go up in value.
Yeah.
So it's kind of like one of those ones where people park it and then just sort of enjoy the ride.
Yeah,
and in terms of, exit strategies for the pubs, we've been really lucky. So pub we bought for 4.2, we sold it for 6.5. Nice. And so we rolled we give our investors a return to cover off on their tax. And then we rolled that over into a leasehold, which gives us a stronger yield. And then a year later, we sold one of our other assets, which we paid 7.3 for, and we sold that for 12. So we've been really lucky in the exit, and then we roll it over into something else. So much so that late last year during COVID, we actually had growth. So our fund went up to the next level, and we looked at an asset in Harrington, which Harrington's a beautiful spot on sort of mid-north coast of New South Wales. And there was a property there which is 3/4 of an acre, car parking, really good mix of trade, had a bit of room to move, which is right on the water.
Oh,
so
nice.
The actual asset value is worth so much without the business within. And so we sold an asset to get that, which was one that we bought for 8.3 and sold for 16 mil.
Nice.
So the fund's been growing gradually. So the investors have been quite happy. And we sort of, I didn't realise it at the time, but we've bought and sold quite a few pubs over the years. And it's almost like you're a pub flipper, but we always had the ability to exit from each asset. And as soon as we got capital growth and reasonable capital growth, and we maxed out without spending a lot on capital expenditure, we sort of would fish around in the market, and we've got great relationships with all the pub brokers. And then we go, okay, we'll get to a figure, and then once we get to that, we'll sort of on-sell.
Yeah, that's interesting. And so when you go out to particular investors, and once again, I don't want to tread on anything that might be confidential here, but when you talk to investors, do you have a typical sort of target return that you talk to people about?
Absolutely. So we have to put that in our IMs. So we have to say the targeted return. And since inception, our basic return has probably been 10%.
Okay.
That's cash return, and some of that's franked. So for those people out there who don't know, franked is basically we pay tax at the company level, so then they pay less tax. And so that then bolsters up the return. That then makes the return worth a lot more. But we target 7.5% and just say, look, that's pretty much the bare bones. And we can't guarantee it just because of things like COVID.
Yes.
But generally speaking, we've been really fortunate. And we buy assets that where we generally see the operator, where we can see upside, and we see an operator who's probably a bit tired and getting towards the end of their career.
Yep.
And then we can see what we can add to it, in terms of initial growth. And the bigger we get, the better buying power we have.
Yeah.
So we've got really good relationships with our stakeholders. So that pretty much adds to the bottom line straight away.
Yeah, interesting. I have another quick question on exiting, if you don't mind. It's just because I have a lot of clients that come to us, once again at Exit Advisory, saying, I've got a business partner that wants to exit, and they're trying to work out options and solutions. And, I imagine your fund is probably a little bit more, organised and structured in this way because it's designed slightly different. But I think, once again, the principles are similar. So if you have an investor that comes along and says they want to exit, typically, how do you handle that process for them?
So first thing we do is we can look at buybacks as well. So if we're cashed up, we can actually buy them out through the fund, which most investors enjoy because you decrease the number of investors and the return automatically goes up depending on their proportion of ownership.
Yep.
In terms of buying out a business partner, so we're kind of lucky with that. Then that's stage one. Stage two is we go back to the group of investors and say who wants to effectively buy the partner out. Something we've explored but we actually haven't progressed with is a secondary market. So this is really quite interesting because you can actually set up a market where the investors, and it's only the investors, can buy from each other.
Yes.
And so they do like an interspecies transfer. So they negotiate the price amongst themselves. And so we haven't actually pulled the trigger on that one, but it's something that we're looking at in the future. And so that adds liquidity to the fund.
Yeah, absolutely.
And, as we can reinvest in that, and it's kind of a really fair way to do it. And then, if investors want to get out quickly, they can do that quite quickly.
Yeah, and I think too, I imagine that by having that kind of framework, you probably take some of the potential heat out of the discussions because, there is a methodology that people generally use. There's it's been done before, and there's examples, right? The trail's been beaten down already.
Yeah, that's right. Yeah, so it's just good to have procedures, for pretty much everything we do in the fund, even from day-to-day management, because I still love to pour a beer and have a chat to my locals because
nice.
Originally why I was attracted to it. But for everything, we have policies and procedures, even like we've created an internal app that we use to train all the staff up.
Yep.
So they just sort of log in and they get trained on pouring a beer. And we're very sort of process driven. However, with our management, we like them to have a lot of freedom.
Yeah, nice. So without kind of sharing the 11, secret 11 herbs and spices here, I mean, what does the future look like? Where do you see things going?
We'll probably bunker down for a little while. There's a couple of assets we're looking at the moment. So the way I look at it is as long as step one for me is to look after my initial, unit holders. And probably one reason why they like that is, it's a bit self-soothing because I'm the biggest unit holder. So, if they know I'm working hard for myself, they're sort of happy with it. So we've got two potential businesses we're looking for at the minute, and we're also really exploring the vertical integration. So I had to look it up because I thought, isn't that just horizontal integration? But it's vertical. I still don't know why. But in looking at buying a brewery.
Yes. Okay.
So effectively, we'd buy the brewery and then basically we'd sell obviously all those products.
Yep.
And it's not just because of that we like the brewery. It's also part of our education of our existing team. So what we want is for you to come into the pub and for our staff, whether they're 18 or 30, to be able to sell you a product that they know a lot about.
Yes.
So, for example, if you like an IPA and someone else just wants a sort of extra dry, our team will be educated. But further than just that easy sort of education, they go to the brewery, they learn all about it, and then effectively they know all about the brewing process. So when they come back, they're far more educated than just the 18-year-old who's left school and pours a beer and there's slops everywhere. And also the brewery component we're looking at has its own restaurant as well. So that will be almost self-sufficient. So that's making money on the side, and then we've got the training, and then we're able to sell the beers, and we've got in our pubs. We've also got the marketing component, which will get us growth. So there's a lot of positives in that vertical integration, especially with a brewery and or distillery. I've explored that before, but I'm sort of more interested in the brewing part.
Yeah, I think that's fascinating. I think it makes a lot of sense. Vertical integration gives you leverage, and that's can be a very, very smart move. But I also think too, just from an employee perspective, you've got a story to tell. Like it's a bit like GE were famous for this, right? Like they would bring people into a division and go, "You're not staying in there for longer than 2 years. We want you to move around. We want you to go into different divisions. We want you to learn." And I think if you can bring people up and give them somewhat a more varied career, you're more likely to hang on to good people. But I think it's a great story that people will want to be a part of.
Well, we take the philosophy that I want my general managers and my executive chefs for each venue, to know as much as possible about the business. So each week we have a very humble Stevens report. And that covers all of the sales and the cost of goods and the wage percentages week on, week out, comparing to last year's. And so they go through and analyse that. They look at the GPs and then they look at the wage percentages, and they do a very simple report for us saying, okay, Steve, there's been like bar sales this week are awesome, but we had a function and we had a home game for the local rugby club. And then they might say, the wages are a bit high because we had 3 people on annual leave. And so the more they know, the better it is for the business, because I get this simple report and I obviously look at them and I look at their report and I kind of go, I need to educate that person more.
Yeah.
And so even if they leave my business and they know more about it than they did previously, I'm not too worried about that, because I believe if you don't do that from the outset, then you're going to have to spend more time.
Yeah.
So, looking through those figures and we've got an ops director now and a CFO, and we sort of built that org chart, and a lot of those guys work with a team, and it's the more educated they are, the better it is for us.
Yeah, I think that makes a lot of sense. I mean, you're answering that age-old question of how do we get employees to act more like owners? Well, you can't get them to even think like owners if you don't share information with them and start bringing them up the curve. So, I think that makes a lot of sense.
Yeah, and you can get we've got an employee share scheme. So a few of our employees are involved in that, and basically that means we sort of give them a large volume of shares.
Yep.
and then they effectively pay it off with the profit that they make from that. And there's good leave and bad leave provisions in that. So that covers us on, having to worry about that in the future.
Yep.
You can also get buy-in from your team in terms of incentives and bonuses. So if they don't actually have the money to buy in, and because we're wholesale and sophisticated investors, a lot of them won't pass that test. So take the money component out and look at their weekly incentives, and all of a sudden they're making more money. And then the third one is if you don't actually want to pay out that money from the business as well, which I believe works really well for us, is just the buy-in with decisions. So when we're looking at marketing or we're looking at new promotions, if you get your team involved, they'll sell it better than you because they're on the floor with the customers. So those three things I think are really important for people to have buy-in for your business and to provide really good customer service.
Yeah, that's another interesting concept. I had a chap on our podcast earlier who his business specializes in what they call participatory budgeting. So literally getting an allocation of funds in a business and pulling together key people with different areas of a business and saying, you know your area better than anyone else. How do you think we should be spending money, or what do you think is the priority for the business going forward? And they're saying not only do they get a better, more efficient allocation of funds, but the buy-in from those people goes through the roof. And so it's just fascinating. I mean, that sort of stuff was not around, certainly when I was coming up through sort of junior ranks in companies. Like, you were kind of a bit of a pleb and you had to kind of grind your way out before anyone would take you seriously. So yeah, it's just interesting to see how management systems and methodologies are changing.
Yeah, I believe it's probably been it's a bit of an innovation that's come from the bigger corporations, and then that's sort of filtered across to hospitality and different businesses.
Yeah,
and the world's changing now, so there's less control and command management. It's more, like I said, getting people involved in the business and rewarding them for it.
Yeah, it makes a lot of sense. Stephen, I could talk to you all day about this sort of stuff. I'm fascinated by it, but of course I understand you're busy and you've probably got other things to run to. But for those who want to know more, though, you've written a book which will be out soon.
Yeah, so 1st of March is the launch. So it's called Find, Build and Sell. So it effectively covers a lot of my career and what to do and what not to do. And it's really geared for anyone who wants to improve their existing condition or their position. So it can be used for, a bar manager who wants to own their own business, or a chef. And also can be used for someone who's a barman who wants to step up. And then it goes into more detail for business owners to actually go to the next level and to start their own fund. Nice. So it's a book that's based on my experiences. And like I said, some good and some very interesting circumstances. But yeah, it's a book that anyone can read, and they can pick it up and, read it and then come back to it. And after each chapter, there's a summary. It's a bit like those cheap books you used to have at uni or whatever. It gave a summary of the book because you couldn't be bothered reading it. So there's those points in there that make it really easy for people to read.
Yeah, awesome. That's fantastic. Well, it sounds like an amazing read. I'm very much looking forward to having a look at it myself. For those listening, we will put some links to the book so that you can go online and buy it yourself. Stephen, outside of the book, are you happy for people to reach out and connect with you?
Absolutely. Yeah, I do a lot on LinkedIn, and so either you can contact me through that, or just through my normal email address is fine. So I'll give that to you to send out. And,
yeah, cool. Yeah,
have a chat, and I can put you onto my team, or I'll talk to you myself.
No, look, that'd be great. And as we always say on the show, if you do reach out to Stephen on LinkedIn or whereabouts, just let him know that you heard him on the Buy, Grow, Sell podcast, so that he has a little bit of context as to why maybe you're reaching out. So, Stephen, mate, thank you. Thanks for coming on the show. And I'm really grateful of you sharing your story and sharing your insights. I know people will get a lot out of this. So, really appreciative.
No worries. Thanks very much, Simon.
Pleasure indeed.